I think the Korean stock market is really crazy right now. You guys are all investing in the Korean market too, right? Recently, the Korean stock market's total market capitalization has surpassed Canada and is now ranked 7th in the world, showing an incredible upward trend. Today, let's take a proper look at the stocks. Let's get right into it. As of the time this video was made, the KOSPI has surpassed the 7,800 mark for the first time in history. And once again, the KOSPI buy-side sidecar was triggered. This marks the 8th activation this year, reflecting a sharp upward trend. In particular, the ones currently driving the KOSPI are Samsung Electronics and SK Hynix. Even though they are large-cap stocks, the flagship stock, Samsung Electronics, is up 7% and SK Hynix is up 15%. In just 8 trading days, the KOSPI market cap grew by 1,000 trillion won to over 7,000 trillion won, making it the world's 7th largest stock market. Just 10 days after passing the UK as the world's 8th largest stock market, it overtook Canada to claim 7th place. A year ago, the overseas financial sector viewed the Korean stock market conservatively, seeing it as undervalued and focusing more on geopolitics than growth potential. Risks and political uncertainties were especially emphasized in this situation. Amid the Middle East war, US-related factors, and global economic slowdown worries, foreign investment banks gave cautious outlooks on the Korean stock market. Until early this year, some foreign institutions predicted the Korean stock market would stay in a trading range. But now, the atmosphere has shifted. The global financial sector didn't anticipate the rapid rise of the Korean stock market. Foreign investment banks have been continuously raising their KOSPI targets in just a few months. It's not just a one-time adjustment. Since the market trend is much stronger than expected, they keep revising and revising their forecasts repeatedly. Now, there are even evaluations in the market that the Korean stock market is emerging as a new center for global capital. What's interesting is that even overseas, people are expressing surprise at the current state of the Korean stock market. That's because the Korean market has long had a strong image of low growth, but now it's showing the strongest upward momentum among the world's major stock markets. Some foreign investors are even saying that Korea could become one of the biggest beneficiaries in the era of AI. Some analysts say the current KOSPI rise is fueled not only by domestic investors' expectations, but also by global funds betting on structural changes in the Korean market, making it more significant. In the securities industry, talk of the KOSPI hitting 10,000 is no longer considered a joke. Recently, 5,000 on the KOSPI was seen as historic, but now major securities firms and global investment banks are predicting 10,000 is possible. The main reason the market is this optimistic is because of the semiconductor industry. With the explosive growth of the AI industry, major global tech companies are racing to expand their data centers and AI servers. But high-performance memory semiconductors are essential for AI servers. The problem is supply. Production is limited, but demand keeps skyrocketing. As a result, memory prices are rising much faster than expected. Hyundai Motor Securities said this trend is not a temporary phenomenon, but a long-term structural change. Semiconductor companies' profit growth is expected to continue, and as funds shift from real estate or deposits to the stock market, they predict the KOSPI could quickly reach 12,000 points. Currently, both individual investors' funds and foreign capital are entering the market simultaneously. In particular, foreign investors are showing a very strong buying trend in Korean semiconductors, and in the market, some are even saying that Korea is one of the biggest beneficiaries in the AI era. Global investment bank JP Morgan also raised its KOSPI target to 10,000 points. JP Morgan noted that Samsung Electronics and SK Hynix have overwhelming dominance in the global memory market. As the AI industry expands, demand for high-performance memory will keep rising, but new production facilities likely won't be fully operational until after 2028. The supply shortage is expected to last for years, and the market views this as a semiconductor supercycle. Earnings forecasts keep rising. KB Securities estimated Samsung Electronics this year's second quarter operating profit could reach 84 trillion won. The analysis is that the expansion of AI servers and the simultaneous rise in memory prices will lead to an explosive improvement in profitability. Kiwoom Securities also believes that the rise in general-purpose memory prices makes it highly likely that results will exceed market expectations, and has raised its operating profit forecast for SK Hynix in the second quarter to 70 trillion won. The target stock price was also significantly raised from 1.3 million won to 1.9 million won. In the current market, there are even talks that semiconductor companies are starting to make too much money. Despite negative factors like the Middle East war and President Trump, 8 out of 10 individual investors who sold domestic stocks in the first quarter of this year made a profit. The average profit for investors who made money was 8.48 million won, while those who lost money averaged minus 4.96 million won. Analysis by age group also gave interesting results. Profit increases with age. Investors 70 and older averaged 18.73 million won in profit. Those in their 60s recorded 10.11 million won. Those in their 50s had 7.32 million won. Those in their 40s had 3.98 million won. Those in their 30s had 2.21 million won, and those in their 20s had 1.43 million won. So what is the reason for such a rapid rise in stocks? There could be many reasons, of course. The recent stock surge is mainly due to foreign investors who had left during the Middle East war, returning to buy. Notably, foreign individual investors, especially those from the United States, began buying Samsung Electronics and SK Hynix. Until recently, foreign individual investors faced a difficult process to invest in domestic stocks. They needed to register as foreign investors and open an account with a domestic securities company, which could take months. Since April 28, the pilot launch of the Integrated Foreign Investor Account Service by Samsung Securities and Interactive Brokers has changed the landscape. Foreigners can now place individual orders through local brokerages or asset managers without opening an account with a domestic securities company, giving them greater access to the domestic stock market. This has become one of the major factors behind the rise of the KOSPI. In particular, the behavior of foreign investors has become much more aggressive. The Korean market was once seen as risky and used mainly for short-term trades, but now even long-term investment funds are entering. AI semiconductors are now the most discussed sector. With rising global competition in AI, securing high-performance memory semiconductors has become a national priority. Samsung Electronics and SK Hynix are seen as effectively dominating this market. This is why analysts say that as American big tech companies increase their AI servers, the influence of Korean semiconductor companies will inevitably grow as well. If Korea is added to the MSCI Index's Developed Markets watch list this June and officially becomes a developed market next June, about 60 trillion won in foreign investments could flow in. This has raised expectations for further KOSPI growth. The government's stock market-friendly policies have also boosted the index. In fact, starting from 2024 domestic political turmoil combined with President Trump's return to power led to the KOSPI falling below the 2,300 mark in April 2025. As the government aimed to tackle the Korea discount and boost the stock market with shareholder-friendly policies, stocks grew rapidly. Of course, as the market heats up, concerns are also growing. Right now, the KOSPI is showing a very steep upward trend, even from a historical perspective. Numbers that were hard to imagine just a few months ago keep coming up, and among people, there's even a sense of urgency that if they don't get in now, they'll miss their chance. In this environment, investing with borrowed money, where people borrow to invest, is also rising quickly. As of May 7th, the Korea Financial Investment Association reports margin loans have risen to 35.5072 trillion won. Since the end of last year, when it was about 27 trillion won, this has risen nearly 30% in just months. Much of the market's money is borrowed, not personal funds. In a rising market, this capital helps drive the market higher. People borrow money to buy stocks, and as stock prices rise, they make profits. Seeing these profits, others jump in to invest more. Recently, not only office workers but also college students and young people just starting their careers are quickly increasing the number of margin trading accounts. But the problem arises when the market starts to fall. Investing borrowed money becomes riskier when the market turns unstable. If stock prices drop below a certain level, securities firms require more margin. If investors can't add funds, forced liquidation occurs. When that happens, your stocks will be sold off involuntarily, flooding the market with sell orders. If repeated, the decline can quickly snowball. Leverage boosts profits when markets rise, but amplifies losses when they fall. Concerns are growing about more young people investing with borrowed money. Investors in their 20s and 30s usually have fewer assets and less ability to handle a market shock. Many now feel a regular salary isn't enough and believe it's hard to turn their lives around without stocks, so more people are aggressively investing. If the market shifts suddenly, you could end up in significant debt instead of making a profit. In fact, after past market surges followed by sharp declines, there have been repeated cases where investors using credit suffered significant losses. The market is strong now, but the rapid rise means investors should watch for overheating and risks. I wish everyone successful investments.